Good evening, ladies and gentlemen. So now this is Asia and Africa. For those of you who have been to Asia or Africa, you would understand it must be hot and spicy. So it's all about value creation, and our contribution to the recipe of the value creation in VimpelCom is based on maintaining our leadership positions in the market where we operate, but also capture the most of the existing opportunity for non-voice revenue streams that I will cover in more details later. And certainly, it is about optimizing our network expenditure and optimizing our costs in general, because at the end of the day, in Asia and Africa, we operate in a different environment than what you've heard from my colleagues Anton and Maximo before. We operate in markets where the ARPU could be as low as $2 per month. However, able to deliver north of 40% EBITDA with this kind of ARPUs. A little bit of background on the portfolio of Asia and Africa business unit. It comprises of 8 operating companies, so it's a multi-OpCo business unit. Different in their market evolutions and market development from penetration rates like in Algeria that are approaching 90% and as low as 20% in some of our markets like Burundi and Central African Republic. With no further ado, I will start with the first market here, the Algerian market. We believe we have a great potential in that market, and we have been successful over the last 3 years to maintain our market leadership there despite the ban and the regulations that are in place in Algeria. It's a very strong economy, very stable political system. The announcements by many government officials in Algeria states that they have more than $200 billion of foreign direct reserves. I don't know many countries who have that much money in reserves. The regulatory body has announced that as soon as the JESI file is going to be resolved, 3G is going to be coming with it. So it was good news for us to have somehow the link between the 3G launch and the resolution to the file of JESI. At the end of the day, as I said, we are keeping our market leadership, so we are still maintaining 56% of the market, which is an amount of subscribers that the government cannot ignore when coming to launch 3G services. The competition comprises of us, Mobilis, and Wataniya. Generally speaking, the company has shown resilience. I do not know of other companies in the world this size of JESI that has managed to maintain an operation without any capex injections for 3 years. That's, I think, an industry benchmark in the world. Once the file is resolved, hopefully, we have prepared a file for a network modernization. So a mega tender will be put in place, the work of which has already started. We have our files ready to hit the ground running, as they say, as soon as the file of JESI is resolved. The performance of the operation so far has been showing a lot of resilience. As I said, not only are we able to maintain the revenues, but actually growing the revenues and maintaining very high levels of EBITDA at the high 50s. The mobile subscribers, as you can see, are kind of stopping at the north of the 17 million, but this is due mainly to the capacity that we have on the network. We don't want to push for more, so we're balancing between the churn that we're seeing, which is relatively low, and getting the subscribers just to fill to the ceiling of the network. So we're managing that very delicately. It's not everything we can get in Algeria, but that's what we can with the current capacity. Once the file of JESI is resolved, I think we have much more to get in Algeria, especially on the 3G arena. The next market is Pakistan, a different market, a mass market here. We're talking about 180 million inhabitants. We're also having the market leadership with our company there, Mobilink, with 36 million subscribers, a very big base. The GDP have been growing at moderate rates around 2.5%, 3.5% over the last few years. Some security and political situation remain tense, and we got used to that actually operating in a market like this, and we knew by now how to mitigate the risks related to this kind of political situations. The regulatory there, the PTA, has announced as well that 3G is going to happen in Q1 2013. Our belief from the recent readings is that probably this will fall further into Q2 2013. However, 3G also represents a huge opportunity in this country, given that, one, it's a very young population. Two, fixed line operations are very small or not very much penetrating the market. And as well, our position being the largest mobile operator with the largest base and the high-end customers. It's a very competitive market with 5 players. We are having a 30% market share as of the closing of 2012. Mobile financial services have been launched a month and a half ago, and mobile financial services is the third pillar of our strategy in Pakistan. The mobile financial service takes a certain dimension in Pakistan, giving the socio-economic dynamics, where young people go to the cities to work and then send home back to their families, wives, and kids the money. Here, mobile financial services plays a very important role in the money movements inside the country, and that's a huge business in Pakistan. So Pakistan, 3G is upcoming. That's a great opportunity. Mobile financial services have been launched recently. That's another stream of revenue that we're looking forward to. And by the end of 2012, we have finished our network modernization tender, which was awarded to 2 suppliers. By that, we are making 2 gains. One, we are redesigning the network to be more optimized, using better equipment that uses less OpEx, but at the same time, making the network 3G ready for us to be ahead of the 3G license awarding. The set of KPIs you see here in Pakistan also shows a very stable performance. Revenues have been increasing. EBITDA has been constantly increasing. And actually, EBITDA in Pakistan has always constantly been increasing more than the revenue growth, which is a sign of gains on operational performance. Mobile subscribers are coming under a little bit of pressure. That's not due to competitive pressures, but rather due to the government and the regulator putting more stringent rules on the sales of new lines for security reasons. Something, honestly, we do not mind, given that it gets the smaller challengers who are trying to create their mass base to be less active in the market at this stage. So we're seeing our gross additions becoming less, but so is our churn, all of which adding to a better operational efficiency. The next market is Bangladesh, and Bangladesh is another massive market with more than 160 million inhabitants. Low penetration rate, still at the 60% level of penetration rate. There we capture the second position in the market. It's one of the few countries in the world that for 10 consecutive years had a GDP growth in the level of 6% or more. So Bangladeshis are having more and more money to spend, more affordability. Their purchasing power is increasing with time. A very young population again. One more time, the regulator in Bangladesh has also announced that 3G license awarding is going to happen in Q1. But in Bangladesh, maybe the pace is a little bit faster because the regulator has already approved, and the ministry as well, the guidelines for awarding 3G. So it seems like quite an organized process in Bangladesh with much less hurdles than the ones that might be in Pakistan. So we believe that this is going to happen quite soon in Bangladesh. And again, here we're very much positioned to grab the best of the 3G opportunity. Again, it's a country that has a very young population, and fixed line is almost non-existent, so no competition from fixed line when it comes to broadband game. But most importantly is that our brand has been originally positioned to target the youth. So Banglalink brand in Bangladesh is very much appealing to the youth. We have the highest market share within the youth segment, all of which, you know, the youth are the best positioned to grasp new concepts and new technologies and adopt them. So in Bangladesh 3G is coming. Mobile financial services and value-added services. We have launched already mobile financial services a year and a half ago, but it is actually, it keeps increasing in terms of the rollout of the point of sales, of the applications themselves that we offer to our customers. And last but not least, we are also doing a network modernization tender there that we started to work on, and that should materialize hopefully within Q1. Again, setting Banglalink to be ready for the 3G upcoming license. The set of KPIs you see in Bangladesh also have developed quite nicely, especially on the subscriber growth side. Again, as we said, this is a market that has relatively low level of penetration rate, 60% only, and it's a massive market with more than 160 million inhabitants. So a lot of land grabbing opportunity is still there in Bangladesh. On the next few slides, and I've met some of you in the last Investor Day a year ago, we promised some headlines, and I thought here it will be nice to link the headlines that we've promised and show how we lived to the promise we have delivered a year ago. So for the first part, profitable growth, and here, as Joe has titled Asia and Africa with profitable growth, we have been constantly delivering higher EBITDA growth than revenue growth. So profitable growth has been really the theme we have embraced in 2012, and that was based on different pillars. One of them is voice and subscriber stream. We've managed in countries and markets that are very competitive, such as Pakistan and Bangladesh, to actually increase the average price per minute. That's not an easy thing to do when you have very competitive markets such as Pakistan and Bangladesh, and also very price-sensitive customers, as you can imagine there. Also, our growth in subscribers in most of our markets were very solid within 2012, also leading to our profitable growth. Invest and data stream, this is new streams coming. So we have been, as I said, quite delivering on profitable growth within 2012. But if you imagine that some of the streams that are going to come next in the next slides, you show that those are streams we have not explored yet, like 3G, mobile broadband, and mobile financial services in Pakistan, and so on. But now we're talking about 2012, and here we have managed in a country like Bangladesh to have triple-digit growth in terms of data subscribers and data revenues. And when I say triple digits growth, it was about to be 4 digits, so it's not on the low side of the 3 digits. It was about to be a 4 digits growth in one single year. Of course, we're starting from a smaller base. We're talking only about edge. But for us, it's a matter of positioning. It's a positioning strategy to be positioned as the data operator, so that when the 3G comes to the market, we are seen as the brand or the operator of choice when it comes to data services. Mobile financial services have been launched in Mobilink also in November 2012. And as I said earlier, that is going to present a huge opportunity for us going forward. On the operational excellence, a lot of activities have been done, but here I would like to maybe concentrate on the OpEx optimization in Bangladesh, so turning a lot of our sites from indoor to outdoor, meaning a lot of saving on the OpEx side, and also the 11-month-long project by which at the end we have came to conclude the network modernization tender. It's a huge one over the next 5 years, by which in Pakistan we will swap the whole existing network with more advanced equipment that will allow a better customer experience, a better OpEx management, and certainly 3G readiness will be granted within that. Also on the operational excellence, we tried call center outsourcing, which led very good results as well in many of our countries. We've managed to defend, as we promised, our market shares in Pakistan and Algeria and strengthen our position in Bangladesh. And as I said earlier, the proof of all those theoretical things we're talking about here is the delivery of EBITDA organic growth that is higher than the revenue growth within 2012 for the whole business unit. Back to the 10 strategic initiatives that Joe has mentioned earlier today. For us to start with the customer excellence, we have 3 strategic initiatives on that. One of them is to create superior customer experience. And the plan here, now I'm moving to what we're going to do in 2013. We have set a touch point net promoter score. It became part of the KPIs set that we give to our chief commercial officers. And we are moving a little bit from the traditional marketing model of Kotler with the 4 Ps and the marketing mix to CEM, customer experience management concepts in marketing. This is being done through training and coaching to our commercial teams across. On distribution, we are investing more money now in terms of training the point of sales, because the point of sale that you used to ask only to sell you some scratch cards or airtime and some SIM cards, tomorrow is meant to sell you more sophisticated services, more sophisticated value-added services and data bundles. So training and investment in distribution, we believe, is a long-term strategy that will pay off very well later. Also developing superior pricing capabilities. And here, we are investing money in developing below-the-line, BTL is below-the-line initiatives. You see in Pakistan and Bangladesh, as I've mentioned, we have 36 million subscribers in Pakistan, 26 million in Bangladesh. Together, it's more than 70 million subscribers. As they say, the fortune is at the bottom of the pyramid. So what we're trying to do is implement systems by which we can segment those bases into very small micro segments and really tackle for every segment what they need. So we talk about the off-net users, the on-net users, the day users, the off-peak users, and target each one of them with a specific promotion that is a short period promotion, maybe only for 2 days, but do 100 of those. Here, there are many benefits. First of all, we're not spending on communication. We don't need regulatory approval for this kind of initiatives. But most importantly, we don't ignite price wars, because the competition does not exactly know what you're doing. You don't have something above the line where you say, I have this promotion with that price. And in price-sensitive markets where we operate, you can imagine a price war can start. So what we're doing here is that we're taking a strategic initiative to enhance our capabilities in doing below-the-line promotions. And I think this will pay back very well, leveraging the big bases that we have, especially in Bangladesh and Pakistan. And also new IN capabilities. We are swapping our INs in Pakistan, done. Bangladesh in progress, almost done. Zimbabwe is done, and Cambodia is done as well. So all this is to get us more ready for the next phase to capture the data opportunity. Profitable growth. And again, we have proven to be able to deliver on profitable growth in Asia and Africa. However, 2 streams are coming that we did not have before. Mobile data, now in the phase of 3G, is going to be much bigger. Today, we're talking only edge. And with that, even we have managed, as I said, to increase our revenues 2 digits and 3 digits in some opcos. But we want to continue on that, and that will be another stream coming to help us on our profitable growth path. The other one is, of course, mobile financial services, and I talked about that already. That represents a huge opportunity, specifically in Pakistan. A third dimension is the operational excellence, and we want here to have a strategic initiative of driving cost efficiency. We talked about the BTL promotions. However, network modernization programs are going to be launched. I talked about Pakistan. That's done and awarded. Currently in process is another mega tender for Bangladesh. And the work for Algeria is done, meaning we are waiting for the issue of Algeria, of Jezi, to be resolved for us to proceed. We will not wait until it's resolved and then start to say, okay, what are we going to do with the network? We know this is a network that had no investment for almost 3 years now. We have started to work on a new design, on swapping the existing network, make it 3G ready. All this is ready, waiting to hit the ground running, as they say, as soon as the file of Jezi is resolved. In terms of CapEx efficiency, so capital efficiency is, of course, very important in countries where, as I said earlier, you operate with ARPUs that are as low as $2. So we are leveraging, of course, the group size in procurement. The group with the size of VimpelCom helps get the best prices from our suppliers. We enjoy that in our markets. And network modernization tenders, as I've mentioned earlier, is a corner pillar of our strategy in capital efficiency. And of course, increasing the site sharing. If my colleagues as well in Russia and Italy are pursuing that, but it is even more important in countries where we operate to all operators. And now we're sensing that in countries like Bangladesh and Pakistan, operators are feeling more and more the need to share more of their networks. So now we're setting actually targets to our chief technical officers in terms of how much of their total rollout needs to be done through sites that are shared. So in conclusion, Asia and Africa is and will remain, I hope, the growth beating heart of VimpelCom. It is the land of opportunities, as you might say. Many operations with relatively low levels of penetration. 3G coming in 3 major markets, Algeria, Bangladesh, and Pakistan. Network modernization tenders done in the 3 countries. Very young population. I think we are very well positioned for the next leap in these markets, especially riding on the 3G wave and the mobile financial services. That's it. Thank you very much.
Thank you, Ahmed. We have time for some questions to you. Can you raise your hand if you want to ask the first question?
Yeah. Hi there, JP Davids from Barclays. 2 questions, please. The first one on the Algerian resolution, there were some introductory remarks made by Joe on how that's progressing. Can we be a little bit more specific in where the negotiations are and what sort of milestones we have ahead of us? Linked to that, I understand there is an intercompany between Erascom and VimpelCom. Maybe just discuss the terms around that, when that needs to be repaid by, and if it can be rolled. And then the second sort of bigger picture question is, you mentioned the opportunity in a lot of these countries for growth. Maybe you can just talk about literacy as a barrier to mobile data growth, particularly in countries like Bangladesh and Pakistan. Thank you.
Thank you very much for the first part. I'm sorry I will not be able to really answer in details, as you can imagine, because confidentiality is kind of a condition in negotiation we're having with the Algerian government. However, as a general comment, the negotiations are still ongoing, and once concluded, will have to be also presented to Orascom Telecom for their governance to take place and look into the resolution. So no much information I can really give here, but I can assure you that there is progress happening on the ground when it comes to reaching a resolution with the Algerian government. It's taking maybe a little bit more time than what we hoped for, but it is moving in the right direction. For the literacy in the countries we're talking about, the literacy levels are higher in the older generations. And as I said, those are very young countries by nature. So 57%, for example, I think, of Bangladeshi population are below 25 years old. The levels of education there is getting higher. I was personally surprised of the level of adoption of value-added services on mobile financial services in Bangladesh once we launched that. They use them to pay their utility bills, their gas bills, and so on. So the new generations are more able to capture the new wave of data application that is coming. And luckily enough, good for us that we adopted the strategy originally to target the youth segments. We have a very good share of the youth market. So our bases are younger on the average than the other competitors' bases, and that puts us in a better competitive situation when coming to adopting new value-added services or data.
Thank you. One quick follow-up, just on the intercompany with Erascom to VimpelCom, the terms there, I thought there was an expiry date sometime this year. Does that loan just get rolled over?
Intercompany, like the shareholder loan, you mean?
Yes.
Well, the shareholder loan is going, one of the applications, possible application of the resolution of the Algerian file could be the payment of the shareholder loan from Orascom to VimpelCom. But yet, this needs to be decided on due time and depending on the type of resolution that would be achieved.
Can we have the next question? Jeanette, in the front row.
Ahmed from HSBC. How much capacity you have in your network in Nigeria to accommodate potential subs growth or increase of traffic? Are you at fully, I would say, is there some room still or not with your capex constraint?
Well, I have to say that the management, the team on the ground in Algeria has done a phenomenal job in maintaining this network up and running for the last 3 years. However, the more time passes, the more it becomes harder to manage. However, up till now, we have passed the most critical times of the year in 2012, being Ramadan, the feasts, and finally the last Christmas. Christmas is not very high in Algeria, but it's considered a peak as well. If you pass those 3, you should be fine. The next real challenge we will have, because as you can see we are very much managing our subscribers and our tariffs, not to really inflate the traffic on the network. However, what you cannot manage is when the consumers change their behavior, like in Ramadan or in feasts. And those are the critical parts that we have passed. The next one should be in next June. I don't hope that we still are in this situation until next June, but just to comfort your question, I think we are managing.
Next question, please. I don't see any hand that is being raised. So, oh, Dalibor, you have a question.
Maybe just a short technical questions. I think for the previous markets, Russia and Italy, you showed some expectations of growth for the markets. I mean, would you have a rough estimates for Algeria, Pakistan, and Italy as well, like this CAGR numbers? Just a rough idea where and how your Orascom businesses would contribute to consolidated top line.
Forward-looking statements, as you might know, and you know, are something we would not do, at least for the companies that are also Orascom companies, because Orascom has this policy. So, but I can assure you that given the 3G introduction, if happens according to what the regulators have promised in the 3 countries, that will give you a boost in the first year of launch. So we have high expectations in terms of revenue growth in our major markets. However, also needs to be understood that the network modernization tenders that we are working on are major changes to your current structures and capital and capex structures that you have in your markets, and they pay back obviously on the mid to long term. So those are the 2 variables that you need to consider to replace the forward-looking statement that I cannot give you.